Welcome back to Squawk. We're watching Bitcoin near $100,000. It hit a high of about $99,500 yesterday. But Microstrategy, the largest corporate holder of Bitcoin, was down 16%. That fall coming after Citron Research disclosed a short position in Microstrategy. Citron said that it's still bullish on Bitcoin and praised Microstrategy's executive chairman, Michael Saylor. But it said the company's volume has completely detached from Bitcoin's fundamentals. Michael Saylor is here with us this morning. And I'd love for you, if you could, it's great to see you. Bitcoin's been on a wild run, and boy, have you been right. But I'd love for you to respond to this report.
Yeah, well, I think a lot of people don't understand our core business. We're a Bitcoin treasury company. We're powered by a Bitcoin reactor. We've got $35 billion of Bitcoin, and it's spinning at 100 vol. So the way we make money is we're selling the volatility and recycling it back into Bitcoin. And we're also stripping the volatility and the risk and the performance off of fixed income securities. And we're transferring that to the common stock. So our common stock is delivering 2x Bitcoin, 2x vol. So Andrew, if you want to understand the economics of this, we generate a spread. The BTC spread we generate, it's a function of the equity premium, the convert premium, and the Bitcoin premium. The Bitcoin premium is the ARR of Bitcoin versus the US dollar. 2 weeks ago, we did 4.6 billion of an ATM. We ran it at a 70% spread. That means we made about a $3 billion BTC gain in 5 days. That would be about $12.50 a share. But over 10 years, that's $36 billion, or about $150 a share, just on that 1 week. This week we did a convertible bond, $3 billion at an 80% BTC spread. That's a $2.4 billion gain. That's about $10 a share, but over 10 years, that's $125 a share to the shareholders. I think that the thesis of the shorts is if the premium in the equity disappears, we can't make money. What they miss is that when we actually borrow money at 6% and we invest it in Bitcoin, and Bitcoin goes up 30%, and by the way, Bitcoin's going up 60%, we're getting a 90% BTC spread, but it would be 80% BTC spread, which means the $3 billion fixed income raise in preferreds or bonds generates the same $125 a share and $30 billion over 10 years. So once you understand that, you have a different view of the company.
So what do you say, though, to those who say there's a risk here? Because this is effectively a levered Bitcoin position. And if, in fact, Bitcoin goes down, this becomes a much more complicated situation.
Yeah, well, the number one risk you take is the existential risk that Bitcoin has an extinction level event and goes to zero immediately tomorrow. But every long investor in MicroStrategy is a Bitcoin maximalist or a Bitcoin believer. They've accepted that risk. Once you accept that risk, what do we expect? We expect it's going to go up 29% a year for the next 21 years. It's been going up 60% a year. So the people that are buying the equity are buying the equity because they want 2x Bitcoin, they want 2x vol. And once you accept that idea, you can see, over the last 2 weeks, Andrew, we've generated $5.4 billion in BTC gains. We're making 500 million a day. I'm staring at my screen and we're selling dollar bills for $3, sometimes a million times a minute. And so it's not impossible. I mean, we may very well be the most profitable company in the United States, growing the fastest right now, because there's not many companies that are making $500 million a day doing what they're doing. And so if you don't like Bitcoin, you don't want any piece of it. But if you like Bitcoin, then this is a monster for you.
Oh, look, I don't think anybody is debating the success that you're having, no question. I think the question, and we had Michael Novogratz on the broadcast yesterday, is just the question of leverage. And, when people talk about leverage and, all sorts of bells go off in people's minds about what can happen if there is a downturn or there is a retreat, not necessarily to zero, but we've seen this be a very volatile asset. And while it's 100% gone up over the long term, and I'm not questioning that, I'm questioning whether you think if, in fact, there was a retracement from 98,000 to, I don't know, 70,000, what happens?
I'll make 2 points. 1 point, participants in the market are buying Bitcoin 20x faster than the supply is coming from the miners. There's a major demand supply imbalance, and that's going to continue for the foreseeable future. So I don't really expect that, but let's say it did happen. MicroStrategy's business is so good. We're generating 1 times the capital we raised. When we raised $10 billion in capital, if Bitcoin traded down $20,000 like you described, we'd still make $10 billion off the arbitrage by selling the volatility. If it trades up like I expect it will, we make 10x that. So we're either making $3 billion on that convertible bond this week in the worst case when it trades down, or we're making $30 billion on that convertible bond if it trades like the Bitcoiners believe it will.
And Michael, how should investors think about buying MicroStrategies versus buying now an ETF that might be levered, for example?
Well, what makes us special is we've got $35 billion of permanent capital. So we can lever that. We can sell a 5-year bond, or we can pledge that as collateral and raise fixed income instruments. If I sell 6% bonds or 6% preferreds, I'm getting that 80% or more spread out of it. BlackRock is a great company, and IBIT's great, but it's overnight deposits. And the ETFs have overnight deposits. So they can't create duration. They can't exploit the difference between borrowing money at 0% and investing at 60%. But that's exactly what we've been doing for the past 4 years.
So right now, I know you've been buying your own stock, but right now, if somebody was interested in Bitcoin, you think that the better bet is MicroStrategy versus buying it directly, for example, forgetting about the leverage piece of it?
You know, I actually think by far the best bet is buy our convertible bonds, because our convertible bonds are outperforming Bitcoin right now with downside protection. That's why we sold 3 billion of them this week. That's why I got a $500 million order to buy one in a 20-minute meeting. So if I was really Bitcoin curious and I wanted downside protection and I wanted the upside of Bitcoin, I'd buy the convert. But ultimately, you got 3 choices, Andrew. You can buy Bitcoin fixed income instruments like a MicroStrategy convert, which is some of the upside but downside protection. You can buy the straight Bitcoin in a wrapped ETF like IBIT, which is fine. Or you can buy high voltage Bitcoin, 2x Bitcoin, which is what MicroStrategy is. And I think it depends on the investor.
Michael, what's the conversion premium and what's the coupon?
We just sold that bond at 55% premium, 0 coupon, 5 years. It's the biggest crypto convert in history.
It's a 0.
And by the way,
that's interesting.
0. And we're the only company in the world that's ever issued 5 converts in a single year. So we are dominating the convert market as well as the equity and the options market in Bitcoin-related securities.
I know you're obviously super bullish on Bitcoin. We had a guest here in the 6 o'clock hour. I don't know if you had an opportunity to see him. He said he believed that it is plausible that Bitcoin gets to $1 million a coin literally in the next year, given what he thinks may happen in Washington as it relates to this new Trump administration.
Well, my long-term forecast is 21 years, 29% ARR. Right now, we're 60% ARR. It'll decelerate toward 20% ARR over the next 21 years, and the volatility will decelerate from 60 vol to 20 or 25 vol. So that's my outlook. I think that the red wave was incredibly bullish. Basically, the red wave converted headwinds into tailwinds. Instead of a 20% headwind, it becomes a 20% tailwind. So I would be more bullish based upon the red wave. But ultimately, I think the right way to think of it is it's always going to be the stronger capital asset versus a conventional S&P index.
So what's that get us to? With what you say, 29% ARR, or what's in 21 years? What is that?
My forecast is 13 million a coin by the year 2045. And what I tell everybody is every Bitcoin you don't buy today is going to cost you $13 million in the future.
Michael Saylor, giving us a lot to think about this morning. We appreciate you joining us on this Friday morning. Thank you.
Thank you for having me.